Michael Sonlin and Herwig Konings are founding partners of Security Token Group. All opinions expressed by them or guests on this podcast are solely their opinions and do not represent the views of Security Token Group or its subsidiaries. You should not take any opinion expressed on the show as a specific inducement to make a particular investment or follow any investment strategy. This podcast is for informational purposes only.
Hello, and welcome back to episode 125 of the Security Token Show. My name is Kyle Sonlin. I'm joined with Herwig Konings, as always, and we're here in sunny Miami, Florida. We're killing it. We've got an amazing episode. The top five this week, one of the best top fives I think we've had in the entire history of the show. This is going to be amazing. But before we get into anything this week, including our main topic about Michael Saylor, Bitcoin, crypto, potentially being securities, we have to talk about the crowdfund. Security Token Market is doing a crowdfund, a security token offering, in fact, where you can participate for as low as $100 into the security token offering. This is going to be very, very exciting. And we have some updates. We've nearly approached 6 million in pledges, over 900 investors from 30 plus different countries, so many that we're already losing track, and the crowdfund will be opening soon. Right now we're in the testing the waters campaign, which means that we can tell everybody about it, we can shout it from the hilltops, but the fundraising has not actually begun. So make sure you sign up because it's gonna go pretty fast and you wanna make sure you're on the list.
Get your spot in line. This is a global phenomenon, as Kyle pointed out. And if you're not familiar with Security Token Market, that's the website where you can get all the latest pricing information, and it's the company behind the show you're watching right now. So there's a great opportunity to participate. Check it out in the link in bio.
So let's get right into it, Herwig. We have our top five. We've got really some huge news. In fact, we're here recording on Friday. Thank God, because news broke last night. We're going right into number one, Boston Security Token Exchange. You may recognize the name. It's a joint venture between tZERO, one of the leading brokers and marketplaces for security tokens here in the United States, partnering up with Box Exchange, the Boston Options Exchange. They actually have a national exchange license, something only a very few companies actually have. They do have partnered together, tZERO to provide the tech, Box to offer the compliance and some of that stuff, and they're going to be launching a security token exchange focused on tZERO settlement, automated compliance, blockchain-based integration, all of the amazing things we've been preaching for a while, and now on the national and federal exchange level, never seen before.
That's a big deal. That's a sign in the right direction that the SEC is really starting to embrace this technology. They had to change and adopt a couple new rule changes in order to make this possible, and they've accelerated that in order to get BSTX to market. And if you like that news, you'll probably like number two, which is Gemini, one of the largest cryptocurrency exchanges and custody providers in the United States, has now officially been approved by the SEC and FINRA to actually operate a digital asset securities platform. So this is not an exchange. This is in fact a broker-dealer marketplace. So not quite the same as BSTX, but a big deal because Gemini has a huge audience. They obviously have a huge crypto know-how, and just now, they might even be trading security tokens, and that's a big deal.
Yeah, that ATS license is the same one we see INX has, tZERO has, Securitized Markets, and many others. Gemini coming into the game. We'll have to see who their first listings might be coming soon. Number three, we've got another ATS, another marketplace to trade digital securities and security tokens, this time from Symbridge. They're going to be doing both issuance and the secondary market. We've seen this model happen before, where essentially they act as a broker, they try to help an issuer raise money in a primary offering, and then following the lockup period, they can then offer secondary trading. So they probably won't launch right away as a secondary platform. They'll probably start as a primary platform and then offer liquidity in the future, but yet another new platform, more liquidity coming to the market. You couldn't ask for anything more.
Launching in the next couple of months, possibly yet another end-to-end solution. That's great stuff. Moving on to number four, we've actually got FireBlocks, which is now officially the highest valued custody solution in the crypto industry. After a new Series E financing of $550 million, we're talking about a new $8 billion valuation. That's nearly quadruple what it previously was. That is a huge, huge aggressive growth for the company. So that definitely is worth mentioning.
$2 trillion in digital asset volume, 20 different blockchains, thousands of cryptos. They custody assets for Galaxy Digital, New York Mellon Bank, as well as many others. FireBlocks. But on that same
Support
note,
for security tokens too.
and security tokens as well. And on that same note, Herwig, on $8 billion valuations, we've got another one. Have you ever heard of an $8 billion Series A? Because FTX US just accomplished that. $400 million in funding for their platform, 1.2 million users, $67 billion in volume. They are quickly approaching Coinbase as a competitor in the crypto scene here in the United States. For context, Coinbase has 73 million users, with about 50% of them in the US. So Coinbase is still a decent way ahead, but an $8 billion valuation is actually pretty close to what we see from Coinbase, which is about 4 or 5 times higher. So
that might be because of
fascinating.
FTX's crazy growth. They've been ramping up and came onto the block, if you will, 2 years ago, really, and now have since become a household name. So congratulations to, of course, SBF and the FTX team. Now, with that, let's get on to John Pittman and get the rest of the security token industry news.
Thanks for getting us going, fellas. My name is John Pittman, for all of our new people joining, and I'm here with some of your weekly industry news updates. So we're all wondering, will digital asset securities become mainstream institutional investments? Well, that was one finding from a new report published by Arca Asset Management, where they say that all securities could go digital over the next 5 to 10 years. Its report was based on a July 2021 survey that compiled responses from over 100 financial service professionals, including those who work in buy-side firms, banks, brokerages, exchanges, and market infrastructure and technology firms. The authors of the report also wrote that digital asset securities, otherwise known as security tokens, are often overshadowed by others in the market, such as video gaming and NFTs. While we're on the subject of NFTs, crypto's favorite SEC Commissioner Hester is of the mindset that the governmental agency, the SEC, needs to issue some guidance on non-fungible tokens. She states that as a regulator, it's something she's watching because the growth has been astounding, and right now people are certainly thinking about ways that they can use the idea of an NFT in the financial space. Let's see, how astounding is the growth? NFT trading volume surged in the third quarter of 2021, increasing by 704% from the previous quarter, and then at more than 38,000% year over year. And that's according to the stats from DApp Radar, which is a data and analysis company. So far, lawmakers and regulators are quiet and have not publicly spoken extensively about NFTs, even though they should. Here is something regulators are talking about. Apparently, the SEC is reportedly reviewing some of the high-yield crypto lending products offered by Gemini, Celsius Network, and Voyager Digital. According to a report published on Bloomberg, the SEC is conducting an inquiry into digital asset lending services. The main focus of the inquiry is reportedly around whether the crypto lending services could be considered securities and therefore must be registered with the commission. The main concern reportedly lies with the high-yield offering, which are considerably higher than most savings accounts that banks offer. Rates offered by these crypto lending services range from 3% all the way up to 18%, while traditional bank savings accounts offer around 0.1%. So, if you didn't know, bank savings accounts are insured by the FDIC in the event of bank failure or theft, which protects investors, while the crypto lending services, on the other hand, are not insured. Accusations of wrongdoing have not been issued yet, but the SEC are having growing concerns over investor protection. Moving on, we have IHS Markit's partnered with Medico, a software security provider. IHS Markit is a global information company with experts in multiple areas that understand today's business landscape. Areas such as energy, geopolitical risk, supply chain, and in today's case, financial markets. From this data, solutions are created. And under that umbrella, there is a securities process solution that IHS Markit intends to utilize in this partnership. Medico also has its own solution to bring to the table, and it's called Harmonize. Harmonize is a secure digital asset solution that secures, automates, and standardizes trades, settlements, and corporate action life cycles. The IHS Markit Securities Processor solution enables clients to replace multiple applications and discrete processes with a cloud platform and integrated post-trade framework, while Medico Harmonize enables institutions to securely manage any end-to-end digital asset use cases, from cryptocurrency custody and trading to tokenization, smart contract management, and decentralized finance. An official out of IHS Markit stated that they are excited to partner with Medico to provide a unified, integrated solution for the secure orchestration of digital asset workflows and the safekeeping of digital assets, along with traditional assets. Something else to get excited about, FTX just announced that they are launching FTX cards partnered with Visa that will enable users to spend their crypto balances at merchants across the world. So how this works is that FTX card users will pay by card wherever Visa is accepted and will be using their exchange balances, which actually hold their digital assets. These assets, in turn, will be automatically converted into the required fiat at the time of payment. Just to reiterate, the crypto held within your FTX account will automatically exchange the exact amount of crypto into fiat at the point of sale, allowing you to keep your remaining crypto as crypto. Of course, this means that users will have to have instant access to spend their crypto 24 hours a day, which they will. The best part is that FTX is offering this option for free since they are not charging any administrative or processing fees. You know what? I love this attitude from Visa because it shows that they are willing to adapt the technology and actually give the people what they want. They're not trying to get blockbustered. Speaking of, there's a heavy hitting blockbuster coming out this week. I'm talking about the weekly STO updates with our superstar Megan. Well, catch you guys next week on the other side of the blockchain.
Welcome back, everybody, and happy Monday. I'm super excited to announce that my first ever episode of Women Building the Blockchain is releasing this Wednesday. I will be highlighting various women from across the globe, all with different skills and backgrounds. My first guest is Hannah Forbes of Zest. In short, Zest Capital enables people to set up an investment DAO backed by a real-world LLC. Check them out on Twitter at ZestCat. You can also watch the first episode on the Security Token Market YouTube channel. So, getting into STOs. Today we have news from NextPlay Technologies. They are a digital business ecosystem for digital advertisers, consumers, video gamers, and travelers. They have a licensed digital token offering platform that will serve as the financial advisor and underwriter for Ample Health's proposed security token offering. Ample Health is an emerging cannabis company. They are looking to use the proceeds from its STO to fund its development and global expansion. Keep an eye out for this. The proposed offering targets to raise between 100 to 250 million US dollars and is expected to occur by the end of summer of 2022. Next up, we have highlights from a security token market client. To recap, the company WCRU Incorporated, in collaboration with the Swiss company UGPay Group, launched a global project in the area of digital blockchain technologies, starting its first stage of sales back in early of 2021. WCRU is the equivalent of a digital stock fully backed by the assets of global investment portfolio. The exciting news is that WCRU Incorporated and UGPay Group are launching stage 2 of their token sales. So that's all from me this week. If I don't see you on Women Building the Blockchain, I'll be right back here next Monday with all the STO news.
Hello and happy Monday. Welcome to the market update. Last week we talked about Dignity Corp commencing trading and then helping the market cap exceed $3.5 billion. Today, the market is selling at roughly $3.633 billion. The announcement just went to show how early we all are in the security token movement and how it only takes a few big players to change the game forever. Well, someone must have listened because I have two massive pieces of news for you. The first one is out of New York City. Gemini Galactic Markets, which is part of the conglomerate Gemini that the Winklevoss twins founded, has been approved for FINRA membership, and with it, the ability to operate as a broker-dealer registered with the U.S. Securities and Exchange Commission. That sounds like a lot of words, but let's break it down. What does it all really mean? The approval allows Gemini Galactic to operate as an alternative trading system, also known as an ATS, which will facilitate the trading of digital asset securities, i.e. security tokens. Adding that such assets are subject to U.S. securities laws like traditional stocks and bonds and are therefore able to be bought and sold through a licensed broker-dealer. The battle of security token trading right now is between tZERO and INX, but things are getting shaken up by the day. And that leads me into the second piece of breaking news. I am so excited to share this that I could barely sleep at night. The Boston Security Token Exchange, or BSTX, which is a joint venture between tZERO and the Boston Options Exchange, has finally received the green light from the SEC to operate as a blockchain-based securities exchange. That's right, this opens the door to infinite possibilities like instant trade settlement, market data recorded on the blockchain, and so much more. Once this exchange goes live, both retail and institutional traders alike will be able to trade on it. So much of the hard work that has been done over the past few years seems to finally be coming to fruition. A fully blockchain-run exchange to compete with the New York Stock Exchange and NASDAQ? Are you kidding me? It's only 2022. We are on the cusp of something extraordinary, and I cannot wait to share the news with you as it breaks. That's all for now, but have a fantastic rest of your week, and I will see you next Monday.
Wakey wakey, welcome to Inside the Metaverse with your host, Eve Van Cole. YouTube is considering NFTs as a means of helping YouTube creators make money. It is the newest major media platform to come out with this news. The Metaverse is heating up, especially after Grayscale announced its new Assets Under Considerations list. It includes multiple Layer 1 Metaverse tokens. The bandwagon is getting a lot more members day by day. You know what? I might just make an NFT collection, tile it, bandwagon, and airdrop it to all these CEOs. And speaking of members, the Turkish president ordered the ruling party to study and explore the metaverse after thousands of virtual territories in Turkey have already been purchased. It looks like Turkey is looking to leave its footprint in the virtual space. Next up, according to The Verge, Google is now gearing up to produce its own AR headset, which is allegedly codenamed Project Iris, after recently hiring the former principal architect on Microsoft's HoloLens. And last but not least, Warner Music Group is launching a concert theme park in the Sandbox Metaverse. The deal could bring big-name stars like Ed Sheeran, Bruno Mars, and Dua Lipa to the Metaverse for the first time. That was Inside the Metaverse with your host, Eve Fanco.
And now let's get into our main topic for episode 125. But of course, for those of you who have been watching the show, you know that we first got to award our Companies of the Week. That's where Kyle and I each choose a company that we thought made the biggest moves in the space last week. And for me, it was an easy one. I actually thought it was going to be Gemini, but then out of nowhere, we saw the SEC announce this new approval for the BSTX. And that is a huge deal, folks. The idea that this is not just another broker-dealer ATS license, an alternative trading system. We saw two of those get approved by Gemini and Symbridge this week by FINRA. The SEC accelerating rule changes in order to make it possible for the Boston Security Token Exchange, which, by the way, has been in efforts trying to do this for over now almost 3 years. Trying to make this happen. So this is a huge, huge accomplishment. It definitely deserves my Company of the Week, and I have high hopes for the Boston Security Token Exchange just because it's also partnered with tZERO, one of the leading operators in the industry, as well as the fact that they also have the partnership with Box Group.
Yeah, the resilience here to keep pushing through and pushing against feedback. A lot of the times the way this works is that they'll file a submission, the SEC might come back with comments and additional changes, and BSTX, as far as I'm aware, have submitted like 3, maybe 4 proposals to the SEC in order to try to get this approval moving forward. And it seems like they've made some serious headway. That diligence is paying off.
Every time they got rejected, one never really knew if it was the SEC rejecting because they didn't like what was going on, or it was just because in this case, it seems like the rules weren't updated in order to accommodate this new type of exchange. Kyle, who do you have for your Company of the Week?
So this is really interesting for me. I was reading this headline, and it's about Genesis Global. Now, Genesis Global is a leading custody platform similar to FireBlocks, who made our top 5. They provide a lot of digital asset custody and provide infrastructure support. They've done over $100 billion in trading volume in 2021. So these guys are a major player working in the crypto space. And I thought it was fascinating to read about how they're building hedging and liquidity solutions for NFTs. So you may know NFTs, non-fungible tokens. Notoriously, they're very illiquid. It's hard to sell them because of the fact that each one is unique, and you have to really find a peer-to-peer buyer that wants to buy the specific thing you own, as opposed to owning crypto where you can just kind of sell it on the market and who cares. And so instead of potentially creating a more liquid market on the secondary side, Genesis is taking a very interesting collateralized approach. We've talked about other solutions like this in the past, and I actually think I named a different solution to Company of the Week in weeks past for similar solutions. I think this is fascinating. You've got $500,000 tied up in a Bored Ape Yacht Club NFT. Instead of having to sell it, you can potentially get collateral against it to provide you that liquidity you're looking for without necessarily needing to find a seller, which can be quite a process. So Genesis seems like a perfect player to leverage this. They've got the capital, they've got the access and the infrastructure. Seems like a very interesting play.
I think that's an absolutely fantastic choice. I mean, the idea that, oftentimes, I was asked the other day, actually, if you had a Bored Ape back when you first could get in early on, would you have sold it by now? And now you don't have to answer that. Actually, you could just go ahead and collateralize it, get some money for what it's worth, pay that back down, and continue to hold on to your Bored Ape or whatever other NFT collection that Genesis ends up supporting.
Time in hands.
And it also does point out the fact that alternative assets like art and other hard to find, liquid assets, they can use collateralization through NFTs to also take advantage of this newfound liquidity solution.
Totally true.
Great
It's the
choice,
bridge
Kyle.
between those assets. Fascinating stuff.
Now, we've got ourselves a heck of a main topic for episode 125. It is actually talking about Michael Saylor, one of the most well-known characters in the crypto industry. He is known as a Bitcoin maximalist, and he recently came out on a podcast with some daring words about Ethereum and any other proof of stake or ICO-based coin. And that is specifically that he believes they are securities, of course. That's a big deal coming from Michael Saylor. He obviously knows a lot about this industry, knows a lot about the underpinning technology. And in this case, his belief is that, in fact, Ethereum does break the securities law in terms of the Howey test in becoming an investment contract, unlike Bitcoin, which he believes, and as the IRS has already acknowledged, is seen as property.
Yeah, no, this is really interesting. I mean, as you mentioned, Michael Saylor is a Bitcoin maximalist. What do we mean by that? Well, he's the CEO of MicroStrategy, which is a tech company that came through the tech bubble and boom of the 2000s and has built a strong company behind it over the last 20 plus years. And recently he came out, I would say 12 months ago or 18 months ago, something like that, announcing that he was putting serious weight in the company treasury behind Bitcoin. They've bought billions of dollars in Bitcoin, or millions, I don't know, a ton of Bitcoin at a price average around 30,000. And it seems like every time Bitcoin's dipping, this guy is diving in, buying more, and driving conversations around cryptocurrency and having Bitcoin on your balance sheet as a hedge against the dollar or some of these other strategies. He's been super vocal in support of Bitcoin adoption, of El Salvador and what they're doing with legal tender and Bitcoin and cryptocurrencies. And so it's been fascinating to see that. And it's, again, interesting to see this divide between those that see Bitcoin as property, potentially suggesting it's a commodity. He said, quote, it's a common good or beyond the control of a company or group of individuals. And that was a big thing for him, is that this kind of decentralized aspect really is what created that value for him in seeing it not as a security as opposed to some of these more cryptos. I think there's really two pieces we can dive into here, Herwig, around maybe why these things might look or feel like a security. The first one being what he mentioned there in terms of proof of stake. You have a group of delegators, a group of individuals that make control and decisions over the entire network. It's no longer this decentralized process where anybody can make decisions and anybody can participate. And now you rely on a elected group of individuals to make those decisions, which does start to feel a little bit like a group of individuals that you're investing in, that their decisions could result in economic gain for you, which is something that's specifically noted in the Howey test that could be a security.
Exactly. That's the key word here, the Howey test. Unlike with Bitcoin, where miners are putting up their own equipment and they're doing their own work to participate in the blockchain network, with a proof of stake model, there's not so much activity in terms of what your personal participation is. And that's why you said it. You nailed it with this whole common enterprise thing. The Howey test, which is what the SEC uses to determine in the courts whether or not something is a security, is comprised of three prongs. The first is the fact that you are investing in a common enterprise. You're participating in something that which leads to the second prong, is being done through the efforts of others, leading to the third prong in order to create a return for you, hence an investment. Because you are no longer actively, earning the yield yourself or the interest. And in fact, a third party, whether it be a blockchain network or an organization or an individual, is in this case potentially becoming the provider of the interest that you're here to get. So that's the specifics. That's the Howey test that the SEC is using in order to go after Ripple, in order to go after many, many other tokens and ICOs and proof of stake platforms, potentially for that very reason.
Yeah, no, you hit the nail on the head. And with proof of stake, you mentioned this term yield, and this is important too, right? Not only with owning a proof of stake, cryptocurrency or token, may that token appreciate in value because of the benefits created by others, which again, that alone could potentially seem like a security. But then there's also this component of staking. And so this idea of staking is essentially locking up the assets that you have. If you have Ethereum or you have a different cryptocurrency, you can lock it up into a protocol or into a platform And in exchange for that, you get an interest rate on the asset that you've provided. So I might be able to lock in my Ethereum and get 10% back per year in rewards and fees that are generated by the network. And so he also made a point to suggest that that does start to seem like it's cash flows. Right now, you're almost getting a dividend from this network, from these individuals that are creating this platform and opportunity. And again, that's another piece of this puzzle where you start to say, okay, well, you've got a group of individuals that I'm essentially investing in that are going to be doing work on my behalf for my money, and I'm getting appreciation for it. And I'm now, driving a yield or driving a return on that investment by, staking that or putting that into a platform. You're starting to see this looks a little bit like cash flows, maybe some dividends, and he has a point.
Definitely, I think that's the argument that he's making. That's the argument that many other attorneys, as well as experts in the space, as well as the regulators, both the previous SEC chairman and the current chairman, both have mentioned several times that most of the coins and tokens that they see in the space today qualify as securities. So that is a very, very big deal. In fact, I think it was a great breakdown that you made of proof of stake. And more importantly, it's really about the fact that we've seen in the past the SEC already go after other products or coins in the past, right? And specifically with Coinbase, they tried to launch a lending product open to their retail user base. But unfortunately, the SEC showed up to their door almost with an unannounced notice. They call it a Wells notice saying, hey, if you launch this, we're going to go after you. And of course, Coinbase was not happy about that because they invested a lot in believing that this product wouldn't actually qualify as a security, yet still the SEC thought that it would. And now similarly, Gemini as well as Celsius also are being looked at as potentially similar problems for securities with their lending products. And then, of course, we've got the Ripple case, which is now being, currently underway with the SEC and being played out in the courts. That underwent its own ICO. So, the idea that there are tokens out there that could be securities, and if found as securities, they would have to come into compliance, which means KYC, AML, potentially, filing with regulators and registration. All of these things become extremely onerous, potentially to the point where it downright kills the value proposition of some of these cryptocurrencies. So that's why this is a rather big deal, and why it's a rather big deal that's, a big name is coming out and saying, once again, Ethereum is a security.
Yeah, it's fascinating. It also could explain partially why Gemini is exploring an ATS, right? Aside from the fact that they see the value of security tokens, it also could protect them against future regulation around cryptocurrencies. If you deem them as security, now you need an ATS license and a broker-dealer's license in order to facilitate that transfer. So it does kind of offer a little bit of protection. But maybe I want to take 1 minute here to close out the episode and talk a little bit about the counterpoint, right? What would an Ethereum individual that loves that platform and somebody that loves crypto, we've been in this space for so long now, we're not here to stifle innovation. So what might somebody on the other side suggest are reasons why it's not a security? And so I think that this decentralization component is really the big one that we look at. So you've got the Reg A Plus by Stacks, where they specifically said, we're going to be raising money compliantly, but we believe our network is decentralized. Once we have what they called sufficient decentralization, which really hasn't been defined, but they were able to successfully get an approval saying that once they reach sufficient decentralization, it is not a security. And Stacks, which raised 30 million or so through Reg A Plus, is now trading on crypto exchanges despite using securities exemptions to onboard their investors. So I think this decentralization concept is really where an Ethereum maximalist might suggest that it's very different, right? Because the Ethereum itself is used inside of the network to pay for gas fees, to incentivize miners to put transactions on chain. It's used as currencies and as a base trading pair in many different assets and NFTs and all these different things. You use the Ethereum, you really do. It does have real world utility in terms of minting NFTs, in terms of sending transactions, in terms of leveraging smart contracts inside of the platform. And so I think that if you have any other thoughts that jump in, that's kind of, I think, the angle that they would try to argue.
That begets the question of, okay, well, can a coin offer multiple purposes? Can it qualify as multiple things? Despite it offering utility, can it still be a security?
Right.
And that's what they're looking at. And I do agree decentralization is one big point of it. We've seen a previous CFTC commissioner go out and say that Ethereum wasn't a security because of this decentralization. And indeed, the compliant ICO model is a workaround. So that if you are willing to play with today's rules, you can potentially still go to market with your original vision. But more importantly, I think with proof of stake is this component of return. The idea that you're being promised for staking some kind of an interest, right? There's a reward as to why you would lock up your token and not trade it whenever you want. And for that, I think the SEC is also going to be looking at it closely to say, okay, is this an expectation of profit right here? And that's possibly one of the only prongs needed to go ahead and start making a case.
That's absolutely right. Only time will tell. I think that the industry only benefits with more clarity and more definitions by the regulators on how these things should be treated. I think, honestly, some of the biggest problems are the fact that we don't have a ton of guidance in terms of the cryptocurrency space, so no one is fully sure how these things are moving forward. But props to the SEC for helping BSTX prove the way in terms of securities. That's what we like about embracing securities, is that the laws around securities are pretty clear as long as you follow them the way that you should. If you treat every asset like a security, there is some level of clarity and you can move forward on a lot of these different things, which is why we love dealing with security tokens.
We have to remember that regulators are only doing their job trying to enforce current regulation and laws. We need legal changes to happen. We know that potentially next month we've got the Biden administration coming out with some kind of a crypto executive order that might make sweeping changes. Who knows what's going to really level the playing field out here. But for now, the experts will continue to weigh in with their own opinions. In this case, Michael Saylor thinks that Ethereum and potentially other proof of stakes could be a security.
So with that, thank you so much for watching. Check out the What's Drippin' newsletter. It's now Monday and Friday for all of your newsletter needs and security tokens. We've got the Security Token Show here on YouTube that comes out every week. We've got Spilling the NFT, which just launched. If you haven't checked it out, Megan and Jessica crush it. And we've got a whole host of great content on STO Markit, blog.STO Markit. We've got new shows coming out on YouTube. Follow us on Twitter, Instagram, anywhere. Links in bio. You got to catch it all.
We love feedback. We love suggestions. We love comments. Please, Kyle and I are on LinkedIn, on Twitter. We're active in our Discord. Please come join us and reach out to us. And meanwhile, we hope to catch you next Monday, and happy tokenizing.